Hello ladies and gentlemen, and welcome back to the channel where we discuss stocks, commodities and cryptos. It's quadruple witching again, which means trillions of dollars are at stake and it is one of the biggest ever recorded in history. But what does that mean for traders and investors throughout the world like you and I? Well, it does mean that we need to start thinking about things a little bit differently. The second week of survey reports have come in, and I can tell you that not many people in the comment section down below guessed 45%. A stronger bull week in the survey report than the previous one. What does this mean, and what has happened in the past when we've seen such readings? As we know, quadruple witching is upon us, so let's talk about everything right now. See you soon. Well, welcome back everyone to the daily show where we talk about markets around the world. As we mentioned, we'll be discussing the stocks, commodities, and cryptos, but more importantly, the macro leading indicators, and of course, the hottest charts and levels, along with our options discussion about zero DTEs. Let's discuss quadruple witching. What is it? Well, it's the simultaneous expiration of all of these options contracts, and it happens once every quarter: June, September, December. With June and September generally having negative connotations the week after the options expiration, that's something we'll be looking at. That means it's next week. Along with all of these things going on in the markets, we've seen one of the biggest call days ever on record. And at the same time, we've got our new survey reports. And I can tell you that that is a bull reading I did not expect. Yes, everybody's flipped bullish completely now in markets, and it looks like they're running away. So can the S&P 500 reach another 100 points before it starts to have troubles? We'll look at the technicals later on. Let's discuss a volume historic day. Take a look at these calls here. This is an extreme amount of calls. Obviously, puts have been higher before, but when you're talking about this OPEX, there is a lot of hedges coming off and a lot of hedging being done both ways to get rid of positions, etc. Biggest call day on record here for many, many years. And of course, that basically means that we're seeing a market that is probably getting a little frothy when it comes to what happens next. You can see here in terms of trillions of dollars of expiration, one of the biggest. We have had a bigger one back at the end of 2022, but really it's the second largest since 2018 and the recorded history that we have here. $2 trillion plus in SPX rotationals that needs to come off. And this will allow markets, and especially the VIX, which is the volatility index, to potentially start to find some volatility on the bear side as well. Because over the last 24 hours, all that happened was we sold the futures and then we found a bull level. We'll talk about that later as well in this video. Let's talk SPX call option volumes. This is not new. This is taken from Goldman Sachs. We know we're at all-time records in terms of floatings. And we also know that when we get to these levels is when we need to be the most cautious. If you go back and pause this video and take a look at the SPX around these times, it usually was around 1 to 2 weeks later that we would find some form of sell if we saw skew compression and a few other key points happening in the market, such as the survey reports going super bullish. Sound familiar? Well, it's where we're at this stage. The Fed dot plot has been updated. It's shown us that there's a terminal rate expectation of 5.6%. Nobody believes it. And basically, the market is calling the Fed's bluff. Are they correct? Well, the Eurozone actually did raise rates. So it turns out that most central banks around the world are probably going to do this, but the market just doesn't care at this stage. It's priced it in, or at least on the surface, it looks like it. For investors, is it the best time to get into a market? I think historically not. We're probably trading around 18.6 at the time of this recording. In general, you want to be buying underneath 16.8 if you're an investor. And I found it to be very accurate to be able to get these levels of under 16 throughout history. You'll notice here, sometimes you have to wait a little while, but there's nothing wrong with waiting if you're an investor to pick up those good prices. Remember, Warren Buffett always says, be greedy when others are fearful and fearful when others are greedy. Well, speaking of greed, yep, it's still extreme greed. And again, it's just being fearful right now. Cautious, fearful. Do we see a turn in the markets? As we've mentioned really now for the last month, we haven't had a swing turn to the downside. We've had a couple of little scalps. We'll talk about the S&P and how that went over the last 24 hours. But we just don't have a proper turn point. So we'll need to look for that over the next coming weeks. Let's discuss the big unusual options activity. Was there some? Well, yes, it was runaways from certain AI stocks, such as AI down here. We also had some nice increases in a few other stocks here. Microsoft in particular, and even Meta found some big bids. But overall, I would say it was just across the board call buying, and it was specifically for the SPY actually. The S&P did very, very well. You can see here all of the unusual options activity, but let's jump into the actual movements here in the SPY. Look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 of the first contracts, the largest volumes of the day, were all calls, and they were all 0 DTEs or for the Friday. Yeah, they were huge positions. And across the board, it was just massive, as we saw before. If we go to the individual stocks, it's some of the most popular ones. Again, at the top, Tesla calls, continuing to prop the stock up for now. We saw NEO as well, finding those $10 strikes in the calls. Intel also found some, and even PLTR tried to get on board with some of these big positions. Were there any unusual ones? I think Vail has become pretty unusual. We're seeing a movement in China that's showing us that recovery is happening in China, at least in the stock market, and we'll look at that later, but that's starting to help the iron ore side and especially the copper side in markets. And if copper breaks this key level that we've just found ourselves at, we could be looking at further runs in the metal sector, at least for now. We did warn about this about 2 weeks ago. We said stop the copper shorts, stop the metal shorts, and stop the energy shorts. And that's because this is a period of time where we tend to see strength in these markets, but we're at that critical level again. Let's talk about rotation. What's going on? Well, last 5 days, technology is now out in number one. That's been really stemmed by basically the last 2 sessions. Semiconductors still is the best 5-day roll, and gold is the worst, along with the defensives, utilities, healthcare, staples, those types of ones. Last 24 hours, though, things get changed up a little bit. So although we had a massive run on the session, take a look at the things that did the best. Semiconductors, the best 5-day, the worst performer of the majors. Utilities in the middle with staples, and then healthcare up near the top. Metals, one of the best, along with solar stocks. So we've continued to see this rotation into metals as copper approaches a big resistance. And we've also seen a little bit of an uptick in defensives. I'd call it day one of defensives doing okay. We need probably 3 days of defensives doing okay before we can be kind of saying, okay, that's our trigger towards shorters actually coming into the market. So just before we jump into today's video and we take a look at all of the biggest and hottest charts that you should be watching right now, I want to say a big thank you to Tiger Brokers, who's sponsoring today's video. Now, if you've been watching the channel for a while, you'd know I love Microsoft. And we've managed to additionally get a few extra Microsoft stocks when you meet the minimum deposit requirements and other terms and conditions for certain members of the community out there. But it doesn't really stop there. Of course, we not only know that Tiger Brokers have been an award-winning broker, but they also have additional tools. And I've been talking a lot recently about the idea of rotation. For us to know that the market is even thinking of turning to the downside, traditionally with such a run, you usually see a movement into some kind of defensive stock sector. Now, recently, we've had, of course, incredible strength in system software, semiconductors, and everything else. But over the last 24 hours, we did see a small spike in utilities and some other defensive sectors. If that continues over the next 2 to 3 days, then you've got something to be watching along with your price action. It's just one of the many tools that we use to really show us that markets potentially could be turning or, of course, accelerating into the growth side. And that is the power of rotation. Can you do it all inside of the Tiger Brokers platform? Absolutely you can. And you can take it even a little bit further by having a look at different concepts and then loading for those concepts. If you wanted to buy, let's say, tire and rubber stocks or copper stocks, you can see here some of the most popular ones to do with that sector and then check them out on the charts. So what are you waiting for? Check them out in the description down below. All right, well, let's jump into the charts. Let's take a look here at one of our combos that we believe is very important. And this is, of course, the big tech stocks that have led us into this current bull run. Did they make a new high? The answer is yes. Interesting times. Certainly thought this one might hold down, and it just took a new high. It seems like the markets are unstoppable at this stage, but that's always the way it is near before usually a turn, especially if you're going for something like mean reversion. Speaking of mean reversion, let's just quickly measure that now so we can have a look at how far away we are from the 20 moving average. And if we actually sold off here, we'd be looking at 16.86, which is starting to get up there with some of the probably widest recordings we've ever seen on stocks like this one. It's even wider than realistically the movements that happened after 2020. So if you're thinking, wow, this market seems crazy right now, well, you could certainly understand that, yes, it is incredibly extended from what we call mean reversion, which would always happen again. And of course, investors are very used to probably waiting for those levels and picking it up when they feel like the markets are a bit more stable. NASDAQ versus Russell 2000. Interesting here to see the Russell weaken so much against the NASDAQ. Small stocks doing very poorly over the last 24 hours in comparison, but the NASDAQ was strong. But I still think we're probably at this point here where NASDAQ outperformance of the Russell is highly likely to slow down. And this reminds me a lot of 2020 and all of the period of time that happened over there. Very, very similar. Skew crush continued. That's good for bears. This is exactly what you want to see. And I would expect skew crush to continue again as we go into the OPEX expiration. Basically, this is what they call the black swan indicator. And the cost of puts has been too high. Every other major kind of turnaround for mean reversion has usually resulted in skew crush. This is the right type of thing that we're seeing at the right type of time. It doesn't mean we can trigger in a short yet, though, on swing trends. It's just not the way it usually works. When we go over to put-call ratio, we've updated this chart here. You can see here that we dropped down to very low amount of puts in the system. That's a good sign. Again, if you're a contrarian bear style trader, again, do we have a way of going against this trend? No, you're better off always going with the trend if you can help it. But as you can see here, we've got up this move and then we've started coming down. This is symptomatic of things like February, November, August, all of these other periods just before, usually around 1 to 2 weeks before everything kind of went to mean reversion or even a worse sell-off. Let's talk about copper. Copper's in our supply zone. So this is, of course, one of the one of the best indicators of economic strength. And you can see it's really come back here over the last basically week. We saw a switch of trend here. This is obviously a super resistance. And I would expect it to find sellers here and then maybe pull back a bit. What happens in this point will actually be the most interesting. But I do think copper's coming back. And I would say this is going to line up pretty well with potentially even iron ore plays in the future and metal plays if you are a bull and markets come back and show the right signals. And maybe we'll look at that in a special moving forward on the channel. Make sure to subscribe if that's something that interests you. Let's move over to central banks. Well, central banks keep bringing in a little bit more of the juice. So you can see here the green line, the Fed and the World Central Bank kind of combo we've got here. It's still very far away though, and I would say it's very extended. Now, you can say that for weeks and weeks and weeks and say, yeah, but the market still keeps going up. That's true. And of course, what you're looking for here is a sign of a proper swing trend change. And we don't have one at this stage. There's a lot at stake here for the Qs, though. You notice that not only do we have a million gap fills that could happen, which is very unusual. I haven't seen one of those before. But this is also the type of place that you would expect markets to find weakness. Previous weeks over here, the problem is going to be in the S&P 500, which we look at later. Treasuries, they've found bid, even though everyone's freaking out about them. They've actually still been buying up 1% on the session. And treasuries are holding okay. I wouldn't expect treasuries to go extremely well until we see the Fed properly pivot around. And that's when you'll see treasuries really, I believe, outperform these markets. Let's move over to the US dollar. Oh, it weakened really hard. So I was looking for a change trend here where we go basically to a higher high and then looking for bull run moves. But it just didn't quite happen. Then it fell straight back off and we're back to where we all began this rally. And realistically, this is a very important zone for dollar and really dollar traders. It's more than likely dollar will weaken over the coming year or two, but I still think there are nice little runs that can be had in it. I'm very much watching this zone. I wouldn't be surprised at all if there's a trade on the dollar next week that's fairly high probability. So we'll keep watching out for that one. It's back at those levels. Gold broke to the low, didn't get the daily close, as we were talking about in the previous video, and then rallied back up. Now, if this continues to rally and then bust this high, good news for gold traders. That probably means we're going back to above 2,000 for the gold itself. And I thought we might get down a little bit lower at 1920. Of course, it's not over yet, but that's a good first signal here generally for gold buyers. If we get through the next levels, we will be showing that we're actually on a squeeze here for gold. And gold traders might be getting a little excited. Yeah, we saw volumes kind of increase a little bit over the session. Let's move over now to some stocks, and we'll start off here with Apple. And of course, the thing with Apple is that it just made a new all-time high. So that's a big one, and I would say that is fairly significant. Of course, bears will not want to predict this anymore. This was the level that we said watch reaction. We saw the sell, we saw the 61.8. You will have lost that position if you were holding it for a short. Generally, this is where you'll actually have to drop it. And if it did move back down, I still remain at 170 or 176 now that we've got the new high as being the major swing trend change points. I like to use Apple as a bit of a kind of canary, and with a new high, we're going to need a nice sell to come through, really take out these demand levels. Otherwise, it's all green, all good still for the swing traders, for the investors out there in the community. Let's move over to SOFI. What's going on there? Hit $10. I still think that's a really great take profit. It was our second take profit on this particular squeeze, and it actually dropped. And we were talking about this in the private community chat, and I said, man, there's a lot of island reversals on some of these stocks. You know, some examples would be, of course, this one, SOFI, but there was others as well. The ones that have really been high profile squeezes. And we actually saw it drop, and then it kept selling for a little bit, and then, of course, just went boom, straight back up. This is still theoretically a live trade towards the short end. Going against these options can be hard, but yeah, actually, it's an island reversal, and it's at the level that we talked about. So a stock within the stock market that is separate to the current trend, well, it's okay because, of course, it's hit those take profit targets. Risk, proceed with their own risks, etc., etc. There are a lot of risks there with so much squeeze possibility. Let's move over to Disney. It found a bounce off the demand level. That's a good sign for Disney. Obviously, we want a new high here to really solidify that Disney could be going back for a gap fill. It's kind of like one of those stocks that we're really just looking at because of the island reversal down here. And more importantly, if the markets keep going defensive at some point in the future, Disney may hold up a little bit better. Another stock that was doing interestingly over the last 24 hours was, of course, Intel. We saw that go up to 35.82, continuing to find, a decent amount of buying strikes. PayPal, one of the squeezes we've talked about recently, found a really good bid, up 3.5%. So that started to go on. And some of the worst stocks in the market, the ones that everyone's been hating, things like Target, etc., finding incredible V-shaped turns. This usually would mean that the bottom is in for Target and pullbacks would be met by buy demand. I'm going to certainly be watching this. And another one that's been getting a lot of hate recently for obvious reasons has been Bud. That actually got a turn as well for a while there. Let's move over to utilities. Did they have a good session? Wasn't bad. The weekly actually looks okay if it closes like that. And utilities continues to strengthen in this market. Although I would say since we talked about it down here, it's really only up around 3.61%. And I would say it's underperforming the market at this stage. We need rotation into utilities, into staples, into these sectors to show us 2 to 3 days to show us that these markets are actually really showing that turnaround. Now, you can see here staples had a great 24 hours and it's coming off a base. This is certainly an activation. And look, there's just different areas. If you want to be long, but you're a bit scared of the markets right now, sometimes the defensives are the better way to go. And at least it allows you to get involved in markets. Let's move over to Tesla now. Gap fill. Well, after hours, it certainly did. As we mentioned, one of the things a few people asked me a question of, how do I get the after hours? Go down to anything less than the daily. You can press extended hours and you can see here the gap fill in the extended hours. Then you go back to regular traded. Thanks to a few members in the community for that one. And you can see here, we actually got theoretically, considering an open down here, we actually got an island reversal. Now, it hasn't killed the trade yet, but that's a gap up, that's a gap down. As I mentioned to the private community, I'm actually looking for this to structure up, then to gap underneath, because that's a much better, much cleaner island. It really shows you deliberation by the market around this level. But yeah, I wouldn't have blamed people for going short on Tesla yesterday with stops above the gap fill. And it's still live. We'll see whether it comes through. Obviously, a key level here for Tesla. If it breaches the 265, it's real possibility of this thing going to the next level, which is 300. And a lot of people won't like that. Tesla bulls will like that. But yeah, 300 may be the next zone. Let's talk about the rest of the world, though. China is heating up. This sector or this particular market, especially the tech, has been really bad for quite some time. If you take a look at the weekly, you'll see how depressed it really is in comparison to the highs of 2021. Now, is it too late? Well, it depends what kind of trader you are, but there are a couple of ways to look at this one. Lots of gap outs. You can see here this beautiful inverse head and shoulders and the way it's running to fill. It probably will come back. Usually they'll do that kind of thing and come back to this demand and then find buyers. But I can say that, yeah, China looks like it's got some turn in it here in the markets, and it can go up even if the stock market, such as the US, goes down as money rotates around the world. Interesting, certainly upticking there. Let's move over to the XJO. Interesting point here for the close. You can see I've marked out kind of a descending channel here. We've obviously got our trend line. We've got our level where, probably the Australian market goes bullish, which is 7,300. Obviously, you've got to always look at copper when you're looking at this market quite a lot. And with the advent of that China run, is it time to actually say the XJO is about to find bid? I'm not there yet, but certainly the trend line is holding. This level is key. You know where we are. We're at a resistance here. We'll find out what happens with the US. That's probably going to drive it the most. Let's move over to some of the other markets now. And we'll actually just load up QQQ to start off with here. I want to note that we didn't quite close on the highs. We did actually sell a little bit here near the end on the real market. Obviously, we got no trend change. So if we have a look down here, every single time the market tries to get a sell, and you can see here on the Qs, no new low, and then it just found a super rally. Now let's have a look at the futures market. So we'll go over to the US 100, and yeah, you'll see it just absolutely blitzed everything. I put some alerts above the highs, and really it just didn't give us anything to continue on. It was down about 1% about an hour before the market came out, and then everything changed. We got a very small time frame change of trend down here, and that just led on to rally the rest of the session. And it had all those calls. They were everywhere. The same thing happened on the SPX 500. So again, S&P 500, you can see the weekly here. The problem with the S&P is we hit that 43.90 gap fill, but there is so little on the left-hand side holding it back. So what I mean by that is anywhere between here and realistically 45.30, you can see I've marked 45.31 to 45.80. That's actually the next big resistance. There's a little bit here at 4,500 flat, but yeah, there's not much stopping the S&P 500 at this stage. Once it cracked through 43, which was our extreme zone number 2, no turn there, by the way. There was just absolutely no proper swing trade turn. We just kept rolling up and up and up. And if we go to the futures market, you can see again, this was a trade that I would take and do take these types of trades. And it was one that happened after the FOMC event. Of course, it is not a swing trend. It is not an activation of any kind like that. You would need to actually take this level out. And it's very important, the difference. We spoke about it in the last 24 hours. If this level was taken, I believe the market was telling us something totally different to what it ended up doing. But we made the higher high. You can see here we busted low. We pulled back up. Very good entry in here towards a short position. You would have been able to make your own decisions at that point. You could argue, well, Tom, if you entered into a short there, okay, well, you lose this position. Well, you're going to lose it about 50% of the time. You can actually say that at one point, considering the entry, you're actually up 1.67 to 1. Now, is that good enough? In my opinion, no. You need to pull at least 2 to 1s out of this to get enough money out of it. But it just shows you were doing okay at one point. 2 to 1 would have got you here. I would have been accessing this next level of demand as a key level for this particular trade. Going against the trend, obviously, is much worse, but the setups don't need to be as good when they're in the trend. And as you may notice here, this was something that one of our members posted, and we were talking about it here in the live stream. He said, did it just switch, Tom? And I had a look at it, and I went, oh, yeah, bugger. This thing's definitely going to at least the gap fill. That's the trade I would have taken to the gap fill, but it just kept ramping and ramping and ramping. Good little trade, well spotted, certainly a change on the smaller time frames. As of what's going on right now, there is absolutely no turn at all in this market at this stage. Even though it's fallen from the top, it doesn't have any good 15-minute structure or anything like that. A level to watch, obviously, this demand down here. I do like seeing demands getting broken to actually show some trend change. That might be important for bears, but at the moment, bulls are still in control. Expect the OPEX day to be continuous of madness, just like it was. That's usually the way that these OPEX trades kind of go. Maximum Payne, let's refresh this now for the 16th. Now, I don't think we're going to get anywhere near this one. And this is now month 3 of max Payne not even getting close. Now, of course, anything can happen, but 415, we were 410 at the start of the week, and we've got 5.5 million options, trillions of dollars of options expiration. So max Payne 3 months in a row now, no dice. Of course, it is never going to be the main trading system. You'll only usually pay attention to this during OPEX, and it's only if you see a technical trend change. Remember, TA is always number 1 on your activation, and all of these other reasons are great to have, but really they help you to build confidence when you see that TA. Is it a swing trend? Is it a scalp? What type of trade are you getting into? Let's move over now to the Bitcoin, and as you can see here, we have a pretty lackluster kind of Bitcoin market move. We've been talking about 24,200 for a while. The market did find some bid off 24.8. It's coming back up. We all know that this is a huge supply level. So as Bitcoin arrives back to this level, I think shorters will be focused a lot on 26,000 and how this market activates. I'd like to kind of see it do this. Hover, go up, bust down, and then look for shorts down to 24.2. We'll find out what happens. Maybe there's some more FUD. Weekends do tend to be weaker for crypto, so that'll be something that I think we should be watching as well. If you enjoyed today's video, then make sure to, of course, subscribe, smash that like button. We'll see you in the next one. And of course, we've got some great stuff coming up on the show over the weekend, so make sure to check that out. Also, big shout out to the sponsor of today's video, which is Tiger Brokers. You can check them out in the links in the description down below and make sure to figure out if it's right for you. Thanks so much. Bye for now.